Economist here. Alright, we got one person up in here with one like. I love it. Thank you for hitting the like button when you join in on the live stream. Alright, by hitting that like button, more people can join in, and when they join in on the comment section, it makes this live stream a whole lot fun. More fun. There we go. Going to be talking about how the lumber futures are closing at $437 per thousand on the July contract. This is incredibly low. Now, for those of you who have been following me on my channel, this is not new information. This is something that we have been talking about for quite some time. And it's not what I like to see this, but it does really confirm and validate a lot of what I've been saying about following the lumber market to indicate the economy and where the economy is going. Lumber is a great indicator. And if you are not following lumber or don't believe the lumber story as I have told it, then really you're missing out on a lot of information that's out there. Now, I'm not trying to brag it up that I'm the most, the biggest expert on lumber or something like that, but I really nailed that lumber market, especially when it was running up to 1,700 per thousand. I called the market out. I called the, basically said that it was going to go back down to normal. Here we are. We're facing the situation. Now, what I found very interesting is that being in the lumber business, you kind of know what to expect. Right? There's just certain things that just take place within the lumber industry. And, like when you go to place orders, it's just what you would expect. You call up, hey, do you have this? How much do you got? You have plenty to do. How much is it? Okay, thank you. Call on the next vendor, see how much they have, see if they got, see what their price is. Just like anybody else, you shop around, you get the pricing, you just get a feel for the game, you kind of learn what their pricing is and where it's at. And then occasionally you'll get an email saying, hey, we got a special run deal going, hey, we're going to do a summer special on a particular item, trying to push this thing out. Just like any sale would be, right? Well, the lumber market is a little different today, as the demand has really, really fallen. Like, demand for lumber is pretty much non-existent in comparison to where we were just a few years ago. Now, understanding that the supply of lumber versus the demand is what really drives prices and not the inflationary scenario or the money printer or any of that stuff. See, everybody was convinced at 1,700 per thousand that it was the money printer, it was the Federal Reserve and their actions that was driving lumber up to those all-time highs. But I wasn't expecting it to go that high, but I was expecting that to go very high because there was a huge depletion of inventory leading up to the collapse or leading up to the closure of all the mills during the COVID lockdowns. So we went into an extreme situation in a shortage situation, like mill depletion, mill shutdown, mill curtailments, all throughout 2019. So when we had a lockdown from COVID and there was even more mill curtailments, and then there was a huge demand for construction, it zapped inventory. There was nothing left. So the mills started operating. They ran up and really produced a lot of lumber. And now there is an oversupply of lumber within the system, at the same time facing shortages within the system. See, it's not all lumber is, let's say, not all lumber is equal, right? You got different lengths, different widths, different grades. See, people think that it's just like it's something simple, right? You just go down to the lumber yard and there it is. Or I don't know, like as if the distribution is always full of it. See, I hear like the manipulation game. I hear all kinds of stuff that's going on out there, but nobody really takes into consideration how difficult it is to take a tree down, get it off the hill, get it to the mills, get it milled down, have it dried, get it stored, delivered to a hub where it's stored again, then distributed out to retailers where it's broken down, brought into smaller units, delivered to job sites. I mean, you think about how much this thing has to go through, and I mean, it's insane. And you think at the end of it, a 2x4 sells for $4. It's like, how can they even do that? From all the effort, all the machinery, all the energy, everything that goes into getting the tree down off the hill to the mill, process through distribution again and out to the retailer till it finally gets to a job site. And people like wonder, it was just like, man, how come it's so expensive? Right? Well, you think about it, there's a lot that goes into this thing. So when you have mills that are running only what it is that they think that they can sell, then you end up with gaps in production, which is something that we have experienced here just recently. Over the last year, working down at the lumberyard, for those of you who know that I work at a lumberyard, we have had issues finding longer lengths or wider widths at different times. It isn't always the same prevalent situation for all the same things. There is gaps in production that happen. So you see it, sometimes you have to wait, and then at times there seems to be an abundance of other items out there. So the abundance of items that are out there that are being offered up for sale are now being offered up for sale at an extreme discount. See, this is something that I noticed the other day. I got a call from one of the vendors who says to me, hey, we got this 8 units of this particular length that isn't really selling that much. How would you like to buy it? And they offered it up at it was like, I think this was on Monday. It was offered up at $450 per thousand. And at the time, that was, I believe, below what the futures contract was at, what print was at. And so when you think about what the cash price was at $450 per thousand, and they're offering it up at just about that, if not less, that was a very telling sign. And I thought, well, yeah, maybe they just have an abundance of, this particular length that doesn't sell very well, and they're just trying to move it out. But then another vendor called and offered up some other odd units for under $400 per thousand. Like literally offered it up at almost $40 per thousand less than the print price. What in the world? This is their desperate attempt to get this material moving. Right? That's the only thing I can explain it as. If the lumber is not moving, the only thing that'll make it move is pricing. And the demand has completely fallen. The lumber market is collapsing as we speak. We can see it happening in real time right now. Think about it. Inflation was supposed to destroy everything out there, and lumber is selling at $437 per thousand. Do you know what that equates down to? Here's an easy way to do this. Pricing per thousand. Right? Now, lumber yards are the weirdest place in the entire world. When they price out per thousand, they're pricing out per board foot. But when you go down to the lumber yard, generally you're going to buy something per piece, or you're going to buy it per lineal foot. And so when you think about the per thousand price, it's very difficult to relate that to what a 2x48 is if you don't know how to do the math. So very simply, right, we're just going to do it very, very simple. We're going to assume 500 per thousand because the math is easier to deal with. And if you take a 2x4 8 foot, what you're going to do is you're going to take 2 inches times 4 inches times 96 inches because it's 8 feet long, and then divide that by 144 because a board foot has 144 cubic inches in it, however you want to figure it out. Generally, most people think of 1 inch by 12 inches by 12 inches being one board foot, 144 cubic inches. So if you have a 2x4 by 8, right, that's 96 inches, and you take those numbers and you divide it, do 2 times 4 times 8, divide it by 100 or by 96, divide it by 144, you're going to come up with 5.33. Okay? You take the 5.33 and you times that by 0.500. That's how you figure out the 500 per thousand. If it was 1,500 per thousand, it would be 1.500 times 5.33. So if you have 500 per thousand and you times that by 5.33, you're going to come up with a little over $2.50, like 265 or something like that. So this is how you can figure out what a futures price would be in equivalent to a 2x4 8-foot standard and better, is you just take 5.33 and times it per the per thousand price of whatever it happens to be. So now at 437 per thousand, we're talking under $2.50. I mean, we're talking a little over $2 a piece. Right? Two and a quarter something. And it's amazing to think how all the inflation that was supposed to destroy the entire globe, and is obvious that it was through money deterioration and purchasing power, has seemed to have left lumber altogether. It doesn't exist. Not in lumber. Right? So now I think about that. Is it really lumber, or is it supply and demand? Right? Is it the price of is it the lumber price due to the placement of the dollar's strength, right, or weakness, or is it due to supply and demand issues? Because when I called it out at 1,700 per thousand and said it was going to go back to normal, and people said I was crazy and that nothing is going back to normal because inflation was going to run rampant, and I said this didn't have anything to do with inflation. And here we are at 437 per thousand with vendors offering up lumber at less than print price. What does that say? Right? Did the money printer do it? I don't think it did. I never thought it did. Never once have I ever thought it did. And now, as somebody who studies the monetary policy from the Federal Reserve as much as I do, I still find people telling me that I was wrong. It was about greed and manipulation. It was obvious, and they really just have no way of understanding that it doesn't come down to the issues of greed and manipulation. I mean, I was calling it out for years now, looking at the devastation of forestry industry that was happening in the British Columbia area, recognizing that the issues that take place within the British Columbia area have a huge impact on the lumber market within the United States. See, everybody just wants to point to greed and manipulation. And I'm thinking, well, does anybody remember in 2019 when that place was just devastated, mills shutting down, curtailments and indefinite shutdowns before COVID, right? These people up there were suffering bad. Their forest industry was absolutely just devastated. And places like, reading those stories of 100 Mile, it just broke my heart. Like, these people didn't have anything else going on up there. It's like, they have trees and logging and mills, and that's it. Like, that's what they got, right? And then that was it. They shut down. They were like, okay, well, go find another job. It's like, we don't have any other job. This is all we do, right? And it was like, it was heartbreaking listening, reading these stories going on up there. But that's not what's happening today, right? This is an overproduction that has taken place, and it's completely collapsed the lumber market. This is the bullwhip effect at its finest. It's easy to call it out if you don't believe the inflationary scenario and you look at it for what it really is, right? See, everybody wants to, say, like, how could it not done it? Like, how could all this money printing not cause inflation? It does cause inflation, but it doesn't cause inflation the way that people want it to, or the way that people believe it does. It causes asset price inflation. Think about quantitative easing 1, 2, 3, and 4, creating an inflationary scenario that failed to manifest itself. All right? All that money printing and a balance sheet of expansion from $850 billion to over $4.5 trillion failed to produce an inflationary scenario for the Federal Reserve, a quadrupling of the balance sheet. So when people are saying, how can you not possibly see that the money printer causes inflation? It was just like, because a quadrupling of the balance sheet from the Federal Reserve back in 2008 after the great financial crisis failed to do it. right? And people want to argue with that. And I'm like, well, what are you going to argue with, man? Did Biden create the inflation? Because Trump was saying there was no inflation at the end of his administration. Does it Trump who did that? Did Trump prevent the inflationary scenario from taking place? Because he was begging for inflation. The Fed should be printing money, going into negative interest rates. Right? I mean, I look at that and I'm like, that's not real. All that stuff on TV that they're talking about, it's all fake. It's all garbage. Every news article talking about lumber was garbage. It didn't make sense. It was not accurate. It didn't jive with monetary policy and the way that the Federal Reserve is truly conducting it. It didn't jive with the reality of the situation when it came to the mills and the curtailment and the inventory levels going into COVID. None of that stuff was jiving with anything that I was hearing from anybody out there. Right? And so when I started calling it out for what it really was and the way that I truly saw it happening, not only from being in the retail lumber industry, but also having friends who log, friends who drives truck, friends who work at the mills, friends who work, in the distribution network, all the vendors, other retailers. Like, there was no place that I couldn't see this. There was none. And so it's no surprise to see that we're here today. It's no surprise that we are at 400 per thousand, 437. And this is going to leave a lot of cheap lumber in the market. The only problem is everybody's going to go like, well, the retailers aren't doing it. Right? The retailers are greedy bastards. They're keeping it up there because they don't understand how the lumber market works. They don't understand that all the lumber sitting in the industry right now, sitting at the lumber yards, sitting in the distribution hubs, sitting at the mills right now, is all expensive lumber. Everything that is being produced from now on is going to get cheaper. All this expensive lumber has to move through the system before the cheaper stuff can get in. But there's no demand for it. So now I got vendors calling me up saying, hey, buy this stuff for super cheap. It's under spot price. We're trying to get it to move. They're desperate, right? They're desperate to get this stuff on. I mean, because if it ain't moving, you ain't working, you're not making, you can't pay the light bill. You can't pay the employees. You can't pay the truckers, So you have to be moving product or you have to shut down, right? And they don't want to shut down. They want to operate. It's July, right? What should be happening in July? We should be framing houses like mad right now. This should be the building season, and there should be permit issuance ramping up, not depleting, right? New housing starts should be ramping up, not dropping. But that's not what's happening, right? They're not going up, they are dropping. And it's pretty obvious through the issues that you see taking place within the lumber markets that this is going to be what you experience throughout the rest of the economy. Is it going to look exactly the same? No, but it's going to look pretty similar. And you think about it, I mean, just to give you an example, I live in the northwest corner of Oregon. Down the coast a little ways is a Tillamook cheese factory. These people make some of the world's greatest cheese, right? It's a huge cheese factory. They make this wonderful stuff, and ice cream is another product that they do. And so when you're buying the Tillamook brand ice cream, you're buying the nicer ice cream, the good stuff, and this stuff was selling for, I don't know, $7-8 for whatever. They're not half gallons anymore, whatever size gallons, whatever size containers they are. They were expensive, right? So if you're buying the stuff, it's cheap, or it's a treat, and you're going to generally probably go to the cheaper stuff. But the Tillamook brand ice cream had gotten very expensive. I was over at the store the other day, and I was buying 3 different flavors of Tillamook brand ice cream because they were $3 a piece, right? So deflation has hit the ice cream of Tillamook, right? Tillamook brand ice cream is like at a deflationary scenario. I got 3 different awesome flavors of it. By the way, malted moo shake. I can't stand the name, but the flavor of that ice cream, that flavored ice cream, right? Malted moo shake. That's the best one out there. All right. But anyway, we're seeing it happen. People are talking about like how they're finding deals, good deals on stuff everywhere, right? But you look at the price tag of a lot of stuff and it's still elevated. But yet, if you look around, you're finding 2-for-1 or even 3-for-1, right? On an elevated, like the price is this, but then you get extra, you get extra, you get like two of them for the price of one. So it's still the same price, but now it's like the opposite of shrinkflation, right? They're doing 2-for-1 kind of stuff. And so you can see that the demand for products, the demand for stuff is slowing down. And when that happens, all the stuff out there that people want to move has to drop in price, or they have to figure out a way to get it to start moving, or you shut down, right? You can't turn on the lights. And we're going to find this is going to be a huge problem. Think about this for a second. This is the type of stuff that rolls through my head, right? So I'm reading articles about how there is a shortage of shipping capacity out there right now, very much like we were experiencing during the pandemic when all the ports were locked up and there was no way of getting containers and stuff like that to move around. Well, that very same scenario seems to be presenting itself again within the shipping industry. Now, here's something very interesting at the same time. Remember the problems that we were having within the shipping industry? That was keeping these ships from being unloaded and moved and all the stuff. It was like, besides the lockdowns and the shortage of workers and stuff, but there was a trucking issue. Remember, they were going to hire the National Guard, right, to move these containers away from the ports. What's going on with the trucking industry right now? Right? Layoffs, shutdowns, bankruptcies. The trucking industry has been completely devastated. Now, let's just take it back for a second and not think about reasoning and all that other crap. An overloaded amount of containers out there on ships in the port and no way of moving them without the truckers. That was years ago. Today, an overloaded ship of stuff out there and no truckers to move it. Not the same reason why, excuse me, but yet it doesn't matter what the reason is if the problem is still existing in the same fashion. The lack of trucking. Now, something I found very interesting inside of this is two things are going to need to happen, right? One of them is you're going to have to figure out a way to move all the stuff around the world, right? And if truckers are having issues, then you're not going to move anything because everything you've ever worn, tasted, listened to, or whatever has been shipped on a truck, right? So if you don't have a trucking industry, you're not going to be shipping anything anywhere. So when you have a devastated trucking industry, you're going to drive inflation. You're going to drive up inflation if you have a devastated trucking industry because the cost of trucking is going to impact the price of everything out there, no matter what it is. Okay? And so now when we experience that same thing on shipping with containers and that there's no way of actually moving these things, then what happens to the price of shipping containers? That also goes up because the capacity has been diminished. Right? So here you have this situation rolling into the future as they're talking about how it is that the inflationary pressures seem to be persistent going into the future, right? Yeah, no doubt. Right. Now, is it the same thing that we were experiencing before? No, not even, right? When that stuff finally makes it through the system, because it will find its way, I mean, eventually, there's not going to be a whole lot backing that up. See, you think about it right now, manufacturing isn't ramping up, it's depleting, right? It's slowing down. Lumber is a perfect example of it. Are they producing more lumber? I doubt it. Not at 437. They're probably producing less. In fact, they're trying to get out what it is that they have at the price that is even below what it is that the spot price is, or the futures price, the cash price, or print price, however you want to call it, right? Because there's a lot of different names. Like in the precious metal industry, we use spot, right? But in the lumber industry, it's called print. All right, guys, I am just going off here for 24 minutes. What are y'all talking about? We got 348 people watching. All right, unemployment is one of the two primary controls of the Fed. Yeah, absolutely it is. And that's really a good thing to really think about and talk about too, because when you think about like the unemployment and how the Federal Reserve used unemployment to create an inflationary or deflationary scenario going into the future, is that when unemployment was really low, all right, and you had a lot of people working consumed. With the added consumption, supply-demand imbalances, and then you would have inflationary pressures. Same thing on the opposite side of that is that when the Federal Reserve would create higher unemployment situations by raising the interest rates, then what you would find is that people would consume less, and then there, with the consumption being less, and you would have supply come back in line with demand, and therefore you would find the prices either coming stop going up or even come down some, right? So now this would typically be how the Federal Reserve would operate, but something very interesting had happened since they hit the great financial crisis and the lower bound of zero is that unemployment or historically low unemployment does not create the inflationary scenario. Not anymore. It doesn't work. That's how come, like, how many times have I said it? The Federal Reserve lost monetary policy. Like they had lost it. It wasn't, they didn't have it anymore after the great financial crisis and the hitting the lower bound of zero and the quantitative easing and all that other stuff. Monetary policy had come to an end. Right? Because the adjustment of interest rates no longer worked. They were at the lower bound of zero. And when they were at the lower bound of zero, which was supposed to create an inflationary, hyperinflationary scenario that was going to destroy the world, and I know because I was there buying silver, dumping every dime I had into it, believing that it was going to protect me from inflation, and didn't do it. It failed me miserably. It's only now getting back to the point where I'm actually getting my money back, or could get my money back, right? But I don't hold any regrets about it. It worked great for what it was supposed to do as an insurance policy. But the Federal Reserve had no monetary policy at that point. Adjustment of interest rates was no longer an effective tool. And stimulating the economy with low unemployment and added consumption failed to do it. It didn't create the inflation that they were hoping for, looking for. Now, granted, you found asset price inflation. Your house prices went up and stock prices went up and bond prices went up and all that other stuff went up. But your wages didn't keep up with like all those asset prices. Like how many people could afford a home after that? Okay, the regular job didn't keep up with that stuff. Sure, standard of living was fairly easy to maintain, right? The cost of living didn't necessarily increase that much, but the asset price, that all those bonds, all the things that created the inequality increased, right? That still happened. So people get mad and they say, hey, man, the inflationary scenario back then, what do you call this? I call that inequality growth. That's what happened. New money poured into the system and it created inequality or a bigger inequality gap. And that's going to happen every single time they add new money to the system. You're going to find incredible amounts of inequality taking place when they pour new money into the system because that's how it works. New money pouring into the system creates inequality. It's just straight up. It will drive the wedge ever deeper. And every time we go into a downturn, people lose their mind and they say that the government has to do something. They're like, okay, we're going to do something. Here's a bunch of treasuries. Fed, go buy them up. There we go, man. Money galore. And then bigger inequality. Asset prices continue to go up. Bomb, all the stuff. Everything that people were, hoping that they would be part of someday has then left their ability. It's just like it just goes ever further away from them. And not realizing that, is by their own begging of the government to do something, take action. The government's okay, we only know how to do one thing. If you want us to do something, and that is we're going to be spending some money, yo. All right, and people are like, yeah, right, spend it on the right things. Okay, we will. Guarantee you. Right? Frustrating. Okay, moving on. Inequality is great if you're on the right side of inflation. That's right. There are no carpenters working. I quit because they won't pay over $35 an hour, even if I run a crew. Yeah, Kevin, I is that right, Jim? Yeah, Kevin, dude, right? I know. And this is the same thing that I've been hearing. I was like, even at $35 an hour, I was just like, Jesus, man. That's like 15 years ago. I was making 25 to 30. And there was times I would be pushing a crew or whatever, but yeah, $25 to $30 an hour for framing was like, that wasn't unheard of, And so like to be at $35 an hour, which is what I hear a lot of framers getting, it's like there was a $5 wage increase over 15 years? That doesn't seem right. All right. Let's see here. Zero crash coming. Hopefully Kennedy gets elected. I don't know what he's gonna do. All right, still got a discount on t-shirts. I'm punching inflammation in the face. All right. Quality of living has far outpaced the cost. Yeah, and that's the other thing. Like, what is like? Because I do think about that. Like, is it the quality of living? Like, do we have a better quality of life nowadays with all the conveniences and pleasures and stuff, like all that? Yeah, I would say we are. Like, even as a general, if you were just like the average general person out there, just general idea of a everyday guy or whatever, right? You think about it, the all the conveniences that we experience nowadays comparatively to what they had 30, 40 years ago, like there's an extreme amount of conveniences. Like we got a pretty wealthy life if you really think about it, even though what it is that we have perceived as being wealth, like the ownership of a house or having a huge stock portfolio or something of that nature, this big cash holding or something, like I don't know, like whatever your imagination I guess could hold. But ultimately, like to be able to have like even the communication of a cell phone, just something as simple as that, and all the things that kind of go along with having a cell phone, the conveniences that can come from it, right? The communication that you have out there to be able to do something as simple as start a YouTube channel and use free Wi-Fi to get the videos uploaded, right? Something as simple as that can change somebody completely around. And that is available today to anybody. Like, I mean, it's not that hard, right? And so when I think about some of the things that we have in our lives today comparatively to what was perceived to be like conveniences back in the day, we're hella wealthy, right? I mean, we're hella wealthy. We're wealthy individuals. Food, conveniences, and pleasures of life. Man, it's everywhere. Like the wealth is rains down. But people don't recognize it because most of us are entitled people who just look at what it is that we don't have in life instead of being grateful for what it is that we do have, right? Because everybody thinks about what they don't have. Nobody thinks about what they do have, not realizing that the abundance of the world is just right there waiting for them at any given moment. It's like there's nothing but abundance in the world, no matter what. Like, no matter what it is, it's nothing but abundance out there in the world. And people just don't realize it because they always think about lacking. And they think about all the lack that they have in their life. And because they think about all the lack in their life, they don't even realize that they are sitting in an abundance of lack because there's nothing but abundance ever, always. All right? That's it. And then, like, whether or not you feel it, believe it, wonder why it is that you don't get it, then, it's out there, right? The real greed is expecting 75% tip from making somebody a cappuccino. I haven't had a new I haven't had a new shirt in a year. I buy shirts. I buy some clothes. Like I've been, because I never really had clothes that were like nice clothes. Like I just always wore t-shirts and jeans and stuff like that. But now I'm starting to like try and wear nicer clothes, and I think that would be I think to have like a newer, updated, stylish wardrobe is like that's cool. Like I haven't had that really since like high school. Uh, are you still investing like 50 stock, 50 Bitcoin, 50 gold per month? What area of return? What are the returns as of today? No, as actually because I had like some I had some debts that I didn't want to take on. I didn't want to spend my cash on some debts that I had taken, so I put it on the credit card. So I'm paying those credit cards off. So for the last few months, no. I have not been doing any purchasing inside of any kind of investments whatsoever. I'm going to knock those credit cards out because if you have credit cards, then there's no better investment than to pay off your debts, right? So I'm going to knock those credit cards out in the next couple months or whatever. And then I'll go at that point, hopefully I'll be in the perfect timing to actually start getting back into investments and stuff like that. So just at this time, just to kind of give you my own personal, like, not that you guys even need to know about any of that, but that's what I've been doing as the last, couple of months and probably the next couple of months going into the future. So anyway, but now's a good time, I would think, to be buying into anything as far as dollar cost averaging. I just got another dividend payment from Altria, which is, it's really cool to see that come rolling in. So getting those every quarter or whatever, dividend paying stocks, man, I saw that come in. I'm like, dang, I wish I had twice that many just to see that dividend be, twice that size. And then I do roll that back into Altria. So, all right. If you can't pay an employee $15 an hour, you shouldn't be running a business. Jay Luther? Hey, I get it, right? But some people are trying to get a business off the ground that doesn't even profit. And most people that I know who start businesses don't make any money at all. They work the business and pay employees, and they don't make any money. And they do that for a while, like a long while. And that's the dedication they go into, the faith that they have in the belief that they are going to actually have something that is going to be worthwhile at the end of this. Now, if they can't pay an employee $15 an hour, how much should they pay that employee? Right? I mean, what if the employee can make the decision on how much they want to earn? Is that okay? I mean, he can't pay $15 an hour. He would totally have this business being up and running if he could have just one more person helping him out, but he can't pay $15 an hour. But as an employee, could I not decide that I don't want minimum wage, but I would like to work for this guy for $10 an hour? You know? What if the job that he really needs help with is not that technically difficult and doesn't take a whole lot of physical demand to it, and it's not that, you don't have to be that smart for it, and so therefore you don't get paid a lot for that. All right, what if that's the job that he has available, and I'm a bum on the street who has nothing to my name, and I smoke crack every day, and I'm just a lame ass person who is just trying hard, but my life is depressive, sucky, crappy place. There's no way in the world I'm going to earn my boss $15 an hour, not in a million years, right? But yet, I could probably do that for $5 an hour, right? And this guy is willing to deal with that because there's nothing I can really do to screw it up. Is that okay? I mean, as a loser crackhead bum on the street who has nothing to his name and nothing going on, should he have the ability to go out there and earn $5 an hour from somebody who's willing to pay him that to sweep parking lot? Because that's the only skill that he could possibly do without losing his mind because he is so mentally deteriorated? No. I mean, he has to earn $15 an hour for his boss, or else you're too stupid to work in America. It's an insult. The minimum wage is a complete insult. I've never seen something so insulting than the minimum wage. I work my damn ass off to try and make money, to earn higher wages. I'd work at the raise, and then they'd raise minimum wage, and it'd be right behind me. I'd be like, shit. It wasn't like even getting a raise. I work real hard, and I get a raise, and then it'd be right there behind me again. And I'd be like, what in the hell? Minimum wage is always nipping at my heels. I mean, what's the point of trying? I just sit around and not do anything, and they'll be forced to pay me minimum wage no matter what, and I don't have to try at all. Cool. That's what I think I would do, like most Americans. Right? People wonder why you got lazy ass people all the time. It was just like, well, you worked hard, you didn't get any reward for it. Oh, all right, yeah, sure. I'm going to do that continuously for 40 years and expect that the company I'm working for is going to have some sort of like retirement plan and benefit. None of that stuff exists. It just doesn't exist, right? Realizing that hard work and dedication and being faithful to your job impresses people out there who may hire you someday. And that's what I realized. It was like, nah, man, it's an energy that goes into work that then benefits your life. It's not the job. The job doesn't pay you enough, right? It's the energy in life that you are putting out there that has the return back to you. And the better you play your job, play your job, the better you are at your job, the better you play that game, the better the see, here's the thing that people don't realize, right? When they work for a shitty boss or something like that, and then they go and put it, like, I don't even know why I'm going off on this, and they go and work for some boss that they don't like, right? And so they only put a half-ass effort in, and they don't really try that hard, and they don't really care, and they even say it out loud that I don't care about this, right? Well, here's the problem: the way you do one thing is the way you do everything. It's the way you do everything in life, right? So I don't care if you're at your job, if you're 8 hours a day giving it a half-ass, you're half-ass in life anyway, right? And that's the reason why you're sucking at life. It's not your boss; it's because you're half-assing it, right? In everything you're doing. I know, because this is the way I figured it out. It was just like, man, you got to stop doing that. You got to go chase excellence all the time, all the time. Right? And when you do that, it doesn't matter if they're paying you $15 an hour, right? Because the things that you are doing in your life have excellence and all kinds of awesomeness that are just flowing back to you. It doesn't matter if you're making $15 an hour or $25 an hour or $15,000 a month, right? It's just like none of it makes any difference, right? And I this is what I've learned about it. It was just like, as money starts to, like, when money came, it doesn't, money changes the way you live. Yes, you're gonna have cars, you're gonna have stuff in there or whatever, but I guarantee you it does not create satisfaction or happiness or joy. None of that. None of that. Like, at first it's excitement because it's new and new things are fun, right? Because now it's like, oh, cool, like all the things that had never happened before, right? Yeah, new experiences, new things. Okay, now that's all done, right? Believe me, if you weren't happy before, you're definitely not going to be happy after. In fact, it might make it even worse. Yeah. All right, moving on. All right, money does not create character. As opposed to the zero wage of a stage capitalism, as opposed to a zero wage of end stage capitalism. Well, what would end stage capitalism look like? Since, I mean, I would have to understand what capitalism looked like to begin with, because I don't see it. Like, I mean, capitalism is when you rise and fall on your own merits and you don't have something like too big to fail, systemically risky banks or something, like, whatever, like, or systemically important banks. That's what I meant to say, right? These, like, those terms do not exist in a capitalistic system, right? Those terms exist in a socialistic system, right? So that's what we really have. There is no end game capitalism when you have socialism doing it. Right? And regardless of what people believe, because they believe in socialism in a way that actually benefits them, this is socialism in a different fashion. This is the way that they do it, that they separate the rich from the poor, because crony capitalism is socialism at its finest, right? Because it's only for the rich. Oh, don't worry. You guys have a lot of conveniences, and, well, just think about it. UE was just talking about it. You got cell phones and beer. Happy, right? We're smoking weed and screwing off all day, getting stimulus checks. And then separation between the rich and the poor. And people don't, and then they get mad about it. And it's just like, oh, Lord. It's just like, how can you not see it, All right, depends on the tool, I'm guessing. You're a car mechanic. I get it. Something snaps and specializes in. But a boat or a toolbox, I'd use the money for down payment on a rental. How about we replace the dollar with corn cobs? Alright. Let's cruise down here a little ways. This whole system is for the rich, and the end game is no labor, no people, no humanity. Is lumber coming down? Lumber is coming down, yeah. It's dropping dramatically. And this is the problem, is that, again, people are going, I just want to keep reiterating this because you're going to see it. I know here in the next few weeks, as the newspapers start to blast out all the information, And everybody starts reading about how lumber futures have crashed, and they go down to the lumber yard and they're going to be like, nope, they're still selling 2x4s for $8, $4 a piece for a 2x4 8, and the lumber futures price is at $2. They're ripping everybody off. Just look, just go down there and ask them, look, and not realizing that all the lumber in the system right now is expensive lumber comparatively. They have to get through all that lumber in order to bring in the cheaper stuff. And that is very difficult to do when you have no demand. And then on top of it, you got people saying, I ain't paying until you bring it down. Okay, so now the problem grows even worse because now they're not going to produce any, which is going to eventually tighten up supply when people do run through it. And when that starts to take place, you're going to see lumber skyrocket. It's called the bullwhip effect. Oversupply to undersupply to oversupply to undersupply. And it doesn't have anything to do with greed or manipulation or any of that stuff. This is left over from years ago, literally started prior to COVID. I mean, this is going all the way back. I mean, I was doing videos about this back in 2018. You know? So this is not a surprise. Like understanding how the bullwhip effect is running through the lumber market separately from other markets that are out there because everything operates at its own pace. Lumber is an incredibly well-established, well-functioning, long-dated, working supply chain. I mean, lumber, you can fire lumber right back up again. The problem with it is that once you shut mills down, once you deplete the logs, once you start doing that, trying to get the logs off the hill back to the mill again becomes very difficult if they deplete the log supply. Give it time and they'll start depleting the log supply. It's just like anything else. Like once you create that gap in production, it takes forever to fill it back up again. And we're going to start seeing that just taking place here. You know? A few years ago, they were running full force, trying to take advantage of 1,700 per thousand. It's not like a lot of people were buying at 1,700 per thousand, right? I mean, how many people you knew ran out there and was buying 2x4s at $13 a piece? Nobody, right? I mean, I know. I worked the lumber yard. It was about as many sales as I'm getting right now at $4 a piece. There was no demand then, and there's no demand now. And the difference back then was the demand that did exist was from inelastic demand. And that's what really made the prices go up. See, it wasn't coming from the average person who says, man, I'm not going down to the lumber yard to buy 2x4s to build my chicken coop and stuff like that. It was everybody at the time. See, I said there wasn't no demand. There was demand. It was demand coming from the builders. There was no demand coming from retail is what I should say. And retail has a huge part of lumber game that not a lot of people take into consideration. It's a huge part of the amount of lumber that is consumed. But at the time, when lumber was shot up to 1,700 per thousand, what they had was a lot of contractors in the system looking to build homes with not a lot of supply at the time. Once you are contracted to build and you start that build, it's on. Like there is no going backwards. There's no reversal. There's no waiting. You have to go forward with this project or else the project begins to deteriorate. So once the project is started, it's on. And if there's no supply in the system and you have even a bit of demand going on to no supply, the prices are going to skyrocket to inelastic demand because those people will pay any price to get it. They have to. They don't have any other choice. And if there's nothing available out there, because of the inventory depletions that had taken place, they will go further distance and they will pay a higher price for it until they get it. And that's really what drove the lumber prices up back then. You know, the depletion of the lumber game started, it started 20 years before that. Really 10 years prior to COVID, there was a huge bug infestation that just completely devastated the British Columbia forest up there. Killed off an insane amount of trees. Here's the problem with that is that they went into salvage mode to try and save the tree. All right, you got to use it for something. I mean, it's dead. It's either going to be, fall and rot and burn up or something. At least we can cut it down and mill it up and get some use out of it. So they went into salvage mode. And so what that meant is that they dropped the stumpage fee, which is the fee that the government charges the logger to cut the tree down. They lowered that stumpage fee to an incredibly low level so that the log price going to the mills became incredibly cheap. So now all of a sudden, the Canadian mills up there had really cheap input costs from the logs, right, coming into the mill. Then, at the same time, lumber prices back in 2018 ran up to about $650 per thousand. Right? In 2000, like all throughout 2000, I would say 15, 16, 17, lumber futures, although were very slow and boring, were nothing but going up. Tick, 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 tick. Every month, every week, every year, it was just nothing. Every time you looked at it, the prices were just going up, 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 right? And so as the salvage mode was taking place and they're pumping out all these logs getting into the mills and the mills are pumping out all this lumber and sending it down to the United States, the lumber is just ticking up, tick, 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 right? Gets up to $650 per thousand. Everybody is just like massive lumber just coming through. I remember looking in my yard one time and every single unit in the entire yard came from the exact same mill. Like that's not the case today. Now you walk through my yard and it's just like just mills, like all kinds of mills, all kinds of lumber from every different mill you can imagine. But back then, when they were in that salvage mode, it was like all Interfer, man. It was all like the entire yard was nothing but all Interfer from Canada. And it ran up to $650 per thousand, right? And then all of a sudden, boom, salvage mode came to an end. Log prices shot way up. Input cost went way up to these mills. And at the same time, lumber prices started to drop. So not only did the input costs go up, but then the lumber prices started to come down. And this is really where the mills started getting punished. The further that the prices kept going down and the input cost stayed elevated, that devastated these mills. And the mills started like just absolutely collapsing all over British Columbia area. And that was all throughout 2019. Right? And if you want to see all the videos and stuff, just go back to my channel. Just look throughout 2019. I was doing a video like every other day, talking all about this stuff, talking all about the depletions, all about the inventory all about the mill shutdowns and inventory depletions and production slowdowns. I even did a video talking about OSB production. They were pulling hundreds of billions of square feet of production out of the market at the end of 2019. Right? So when there was a shortage of plywood that shot CDX from $20 a sheet to $80 a sheet, was it any surprise to me? No, not at all. I mean, they just pulled hundreds of billions of dollars or hundreds of billions of square feet of production off the market at the end of 2019. So yeah, in 2020, we had shortages of plywood. Oh, I wonder why. I mean, it was just like, it was so obvious to me. And they were saying it back then. We are not profitable in this position here. We are pulling this product. We're pulling this line, this production. And so it was just a matter of time before it ramped up. And this is one of the reasons why plywood never really came back down to like the $20 like matched lumber, is because there's still a shortage of plywood out there considering how much OSB production was taking place back prior to 2020. Right? They are ramping up production. They're getting more out there, but it's not nearly as much as it once was. I mean, they were producing a lot of OSB, oriented strand board, the comparable building product to plywood. They were producing a lot of that stuff way back in, at the end of 2019 when they finally shut it down, right? So when they ran through all that inventory, man, where are we going to be at? We're going to be at a much shorter or much tighter supply than we were prior to going into it. And this is one of the reasons why you keep seeing plywood up at, $25 to $30 a sheet. All right, let's go check out that super chat. Thank you so much. What is that? Antentaflu. What are my glasses? What is that? An inch in influtorial Bob. Oh, good Lord. Thank you for the $5, man. I'm just going to call you Bob. All right. Thank you very much for the $5. What should a consumer pay for a 4x8 OSB, 2x4 studs? Can a consumer call a lumberyard and have them price out a home build? Oh, absolutely. I mean, here's the thing. You're not going to go down to a lumber yard and say, hey, how much does it cost to have a house? Like, how much does it cost for a framing package for a house? That's such a broad question. There is no way that a lumberyard can even give you an idea on that. Now, every lumberyard is going to be different as far as what it is that they carry at the yard, and and what their customers use for for their style of framings or building houses and stuff. So like different lumber yards for the regions are kind of similar to each other, but maybe lumber yards across the nation may not necessarily look the same or carry the same products or build the same way, right? So a sheet of OSB right now is so expensive and so limited in availability that I don't even carry it. Like I haven't stocked it. We stocked a couple of units throughout the last few years, but they don't move very well. And when you have it priced at a level that is almost the same as the 4-ply CDX, people just have a tendency to buy the plywood because it's a better product. It's, OSB is meant to be cheaper and it's an inferior product to plywood. So, like, if it's going to be the same as like 4-ply CDX, then why even carry it? So we don't even carry the OSB right now until the price actually comes down. 4-ply CDX we're selling that at about $24 a sheet, and the 5-ply is about $27.50 a sheet, I guess. 2x4/8 standing and better, kiln dried, and a premium grade, because we carry the premium grade, is $3.99. Now those are all the retail prices that I have for my lumber that I'm selling out of the yard. And what was the last part of the question? You can have them price out a home build, yeah. So generally, how you price out okay, so let me just kind of give you the rundown on how this would look. An individual will come in with a set of prints, and they'll come up and they'll say, do you have anybody who does takeoffs? And then, yes, we do, right? So we'll take the set of prints, give them to the guy who does takeoffs. He will look at those prints, determine what it is that is needed for the material, right? A lot of times there are programs that people will use to spit out all the information that you need, because there's all kinds of really awesome programs for that. Many times you have to change the prints, not necessarily change the prints, but adapt the prints to the builder, and their needs. Understanding like there's all kinds of components to this thing. There are floor plans, there are truss plans, there are all kinds of stuff that happen, right? So where it is that the person who comes in with the prints and says, hey, I want the complete deal. Like I want start to finish. That means you're going to supply them with the rebar to do the foundation. You're going to supply them with the, everything, like all the framing material, the siding, the roofing, the windows, the drywall, the cabinets, the doors, and everything, right? From beginning to finish, every piece of material comes from that particular yard. Now that does happen, but not as frequently as pieced together. So like the person who comes in with those prints will say, hey, how much for the framing package? Right? They don't want any other pricing. They don't want the window pricing. They don't want the siding pricing. They don't want the doors, nothing like that, right? The only thing they want is the framing package. How much is it going to be for the lumber and the sheathing and the floor packages and the trusses and stuff like that, right? Sometimes you might have somebody come in and say, hey, I need a bid for a truss package. Like they've already got it framed. They went and found the material to frame the house, but now it's time to roll the trusses out and they need to get bid on trusses. So you might find where it's just that portion of it that's what you're doing. So if you go to somebody and you say, hey, I want a complete package from beginning to end, generally you will hand that set of prints over to the person who's in charge of supplying. So you'll hand it to the salesman, and the salesman will bust that down into different projects, right? So basically different phases: foundation, first floor, second, first floor, like the floor plan, like, laying out the floor joists, putting out the subfloor, stuff like that. So that might go with the framing package. Maybe that'll be separated. So you'll have like, the first floor walls, second story floor, second story walls, truss package, each one of these being a separate one. And then as the person calling up saying, hey, I want, okay, phase 2, phase 3, phase 4, or however, the floor plan, the second plan, the truss plan, or the truss bid or whatever, and then these different phases start going to the projects, right? And at any given time, the builder might say, hey, I'm pissed off at you. And then That's it. Like, he buys all his windows and doors or something someplace else. Or maybe he has an outlet for some really awesome cabinets that are in some other state, and he goes and gets them from his cousin over there. He gives him, like, this killer deal. And so he takes a trailer way over there to go get the cabinets. Well, who knows, right? I mean, building a house is, it's not only is it unique to each and every single person who does that, but the style, like between the style of how it gets done, but then just the, you know, like how it goes down. Like some people might stick with one supplier. Somebody might just use like every supplier under the sun, looking at every single person, calling around to get the best pricing on everything that they could do, because that's the game that they play, right? They're always going for the best deal and the cheapest thing, because every time they put something cheaper into this house, then it's just that much more money into their pocket. And if they do that a lot, you find that a lot of times they're kind of shoddy builders, not necessarily, because I find a lot of builders who are very frugal and very, cautious about how they spend are also very, very detail oriented in a lot of stuff that they are doing. So, you know, all right. Wow. Look at all these comments. My goodness. You guys are just killing it here. All right. And don't think that if you, a do it yourself, can take out the middleman by getting prices yourself. These builders and contractors have big buying power. Lumber yards are drooling for their business. Yeah, that's true. Like if you come to a lumber yard and you're like, hey, I'm gonna be doing a subdivision here and I plan on building 20 houses this year, right? I expect to get a pretty good deal on 20 houses worth of lumber, right? I mean, if I'm doing a lot of business and I'm consistent with you and I stay dedicated to buying all my material from you, you're going to give me the consistently best price so I don't have to go shop around. Like the moment that I have to go shop, I'm just going to bail out because I don't have time to do that, right? So I'm going to get the best price every time for my 20 houses, right? Well, yeah. Hell yeah. Absolutely. I mean, damn, that's a lot of lumber you're talking about, and that's a lot of material, and yeah, you're right. That's going to be somebody who's going to be who has buying power, buying a lot of material, pushing a lot of material through with bulk, with quantity, you get discounts. So yeah, you're gonna probably get a better deal. Now, if you go to a lumber yard and you're like, hey, I build a lot of stuff every year, so I want a pretty good deal on this purchase right now. Okay, you say you build a lot of stuff, right? And I can imagine you do. And you're here right now wanting to make, a few $100 purchase, and you want a discount on it because you're promising me that in the future you're going to do a lot of business. Does this, like, I'm here, I'm a retail store. Like, you come into the store to buy retail items. You're a retail store, right? So how about this instead? Instead of me giving you a discount on these items right here, why don't you come to me with your next project and then let me discount that material? And if we do this on a regular basis, well, then maybe you might find that I'll be giving discounts on a regular basis as well. See, this is a give or take, right? See, now here's something that I've had done to me. This guy comes in, spends half an hour, 45 minutes talking about all this fence and barn, and spends time. Like, we put together a bid of material that was $65,000. I was like, yeah, I want to do this one, right? I mean, this is a lot of lumber. There's going to be many trucks, right? So I'm down. This guy seems real. Like, he's got a big old gold ring on and everything, and he's talking the talk, right? And he's talking it all up and everything else. And he says, so you're going to give me a good deal on all this lumber? I said, absolutely. I'm going to give you a good deal. I worked him up the best deal you can imagine. I mean, it's like, like a really good deal, right? I mean, this is better than I could get myself, right? And I knew what was coming, right? Because we spent all this time, and he jazzed it all up and he says, okay, well, I can't take this all at once. Here it comes. Here it comes. Oh, son, it's not $65,000 worth of material we're talking anymore, is it? Now, you want the price at $65,000, but we're going to now cut this into maybe half the project, or wait a minute, maybe a quarter the size, because we can't take it all at once. He doesn't have enough room there at his job, right? I say, no problem, sir. I will store the material for you. You just go ahead and just write that check for $65,000, and I'll put a spot right out there, and we won't have any worries about having to worry about your space out there or anything else. It's all paid for. I got the space here, and I'll just deliver it up to you whenever you need it. Okay? And by the way, there will be a 25% restocking fee for all the material that you return. Right? What's going on, man? You want to do this deal or not? I mean, I gave you a good deal. You're not going to get a better deal. Anybody who gives you a better deal than this is giving it away. We're talking $65,000 worth of stuff. You just sat here and talked for 45 minutes about $65,000 worth of stuff that I gave you a really good deal on, and now all of a sudden you don't want to do this deal. Right? So you tried to get me to get down to the best price so that you could get this little tiny piece of material? No, I don't think so. Like, that's not the way this is going to go down. We're going to do business on a real deal, right? Now, if you want a smaller package, let me work up the best deal I can on a smaller package that's going to be profitable to me, take, an advantage for you, and let's see if we can make business happen. But that's the way this is going to go down. But we're not going to be playing this game where you think that you're going to be getting a deal for $65,000 worth of material and only buy $6,000 worth of it. It doesn't go down like that. I've had other people say it to me before, and I don't mean to get irritated because it is kind of irritated, but I've had other people come to me and say, how much for a pallet of torch down? And I'm thinking, torch down roofing? Like for flat roofs in Astoria? Like, there ain't no, what building are you working on in Astoria? You need 25 rolls of torch down. There isn't. There's there is, but no, you don't need that. What building are you working on? Oh, well, I might store it. And I'm like, no, you're not, right? What you're going to do is you're going to buy a pallet and then try to return it. I said, that's fine. Same thing. I'll sell you the entire pallet. I'll give you a 10% discount on it, and it's a 25% restocking fee for all the material you return. Right? Oh, you only need 4 rolls. Okay. See, this is what drives me crazy about this stuff. I mean, and so that's not the way to get the deal. Like, if you want to get a deal at a lumberyard, here's how you get a deal at a lumberyard. I'm going to tell you, it's a very, very, very tricky secret on how you do this, right? To get the best deal at the lumberyard, what you do is you go down there and you learn everybody's name, right? You learn every single person's name, and you know what their name is. When you walk in, make sure that they know your name too. Walk in, hey, good morning, Simon, how you doing? Hey, Dave, what's up, man? Do that. Make sure you have that kind of connection with your lumberyard, because even if you don't get the price, what you're going to get is you're going to get somebody who's going to be there for you. I need this. Bam, here you go. I need it delivered. Let me see what I can get for you, man. Right? Then you have a lumberyard who's trying for you, right? We're all in this to make money. Right? We're all in it. I want to see you guys make money. I want to see builders make money. I want to see them make a lot of money, right? But I can't be ripped off and wasting my time doing it. It's just it can't work like that. We all have to do this together. And now most of the contractors I work with are awesome people. Like, literally 95% of the people I work with are very understanding, very cool people. They know how the game works. We all, try to do this together. They shop around. I understand, hey, stocking dealer over there is going to get you a better price on that particular product than I can get it. Hey, that's just the way it goes down. Understanding that's the way the game works is cool, but 5% of the people are constantly trying to just, take advantage of the situation, or take advantage of, the services or the pricing or something. And it makes it very difficult to try and then provide those people with quality service, good pricing, all that other stuff. They just basically ruin it for themselves. But if you go down there and you learn everybody's name, and you said, it's like, hey man, I got a kind of a tricky situation here. Is there any way that you guys could do something for me on this? Those guys will go to work. You're nice to them. You're every morning saying, understanding, hey man, how's the dog, man? You got that new puppy, man. How's the training going for, for the waterfowl hunting or whatever? You just get into whatever it is that they're talking about or into, and you're going to find that is how they end up just naturally giving you better deals. Is they'll let you know when, hey, we got this misordered door or whatever, you want a good price on the, an entry door or something. those type of things start to happen, but they're only going to happen to people that they like. They're not going to give it to the person. I don't care how much money they spend. If they're a jerk, they're never going to get a good deal, right? They will have to fight tooth and nail for every deal that they get if they're a jerk to the guys down there at the lumberyard. But if they're just super nice and just, you know, friendly and just be normal, right? Just be normal and just engage in normal business, you're going to find that the more you present yourself down there, the more that they're going to try and help you out and, you know, and do things, you know, to not only provide like better service and faster service and quality service, which is worth money, right? Anytime you can, time is money. So even if it costs a little bit more, if I can get it to you faster, then, you know, that's really what it comes down to. But that's like the easiest way there. Understanding that there's just some things that you're just not going to get a good deal on. Like lumber is not something you can get a good deal on. It's just like the margin on it is just too low. There's not enough profit in it to try and adjust the prices down. It's a very much a lost leader when you think about how much effort it takes to keep it, store it, transport it, cut, you know, it's just like whatever. The nails, however, that's really where the profit is made. So there's a lot of margin on the hardware. So really, lumberyards sell lumber so they can sell the hardware because they don't really care about the lumber part of it. There's not enough money in it. But there is a lot of money in hardware and selling all the nails and screws and glue and everything else that goes with it. There's a million little tiny fasteners and brackets and things that go into building a house, and they have a fairly decent margin to them. So you can just, here's a great way to go about it, right? Because the lumberyard just, like I said, the lumber part of it just sucks for them. Like they just don't make any money on it. So you go to them, it's like, hey man, how about, give me the price for all this lumber, right? And don't even question what it is. Just do the retail price because they can't discount it that much anyway, right? And just say, okay, here's my hardware list and do it separate, right? Maybe even add it in at the bottom. Like say, hey, here's my lumber, but then can you put the hardware here at the very bottom and list it all separately, right? And just say, hey man, I totally get it on the lumber, right? I mean, I'm cool with the lumber price. Is there any way that you could help me out on the hardware part of it? Right? Is this like, is there any room for discount on the amount that I'm buying here? Or is there, how much more would I have to buy? Do I have to buy a case of nails, or, you know, do I have to buy a case of hangers in order to get the price? Like maybe you need a whole case. Kind of think about things like that because the hardware is where you can get the discount, right? You're not going to really get it at the lumber. Everybody chooses for the lumber because that's the bulk item, right? That's the one that has like the big ticket item to it that they're trying to get the price on. But really, the best place you're going to get the discount is on all the rest of the stuff. Not so much doors and windows, but definitely on hardware, like paint. It's like all the other little things, right? All that stuff has a higher margin to it. And so that's where you go to try and get your discount. Just go ahead and just pay for the lumber as it is, because, you know, you might get a better discount on it, especially if you're, you know, building the 20 houses or whatever. But for the most part, it's the hardware and everything else that you're going to get your real advantage from. All right, man, look at all these comments. You guys are going crazy here. All right. I wish people from the future would just leave me alone. Wow. All right. All I know is I can't afford a house. Yeah, people ask me how come I don't buy a new car, and I say, yeah, I can't afford a new car because I'm buying a house. All right. Houses are damn expensive. All right. Not what my index fund says. Okay. You'd be surprised how many real estate agents don't know how the 2008 financial meltdown happened. Oh yeah, well, most people probably don't. Like I don't think that's just to real estate agents. I think that most people don't. You know, anybody who's gotten into economics since then really understands it. You know, anybody who's ever watched The Great Short, you know. All right, hyperinflation within the next 5 to 10 years. Own income, produce assets. Hey, Corn Palm, how come there's no inflation in lumber? I'm curious about that. I mean, if we're going to have hyperinflation in the 5 to 10 years, how come there's no inflation in lumber right now? How come I was able to get $3 ice cream from my favorite ice cream factory down the coast here a little ways? How come, like, I mean, it was selling for $7 just a few months, a year ago or whatever. How come I don't know, how come I'm finding list of deflationary items that are coming like crazy across the news feed for the reasonings that the Federal Reserve now needs to lower interest rates? Like, is there a hyperinflationary scenario coming when they expand the balance sheet from 850 billion to 4.5 trillion dollars? I mean, that was a quadrupling of the balance sheet. It failed to produce an inflationary scenario. Here we had a doubling of the balance sheet from the COVID era inflation, and like that is to be the reason why we have a hyperinflation scenario? Are you sure it wasn't supply chain breakdowns? Like lumber explains it perfectly as a supply chain breakdown. It doesn't explain it at all from the money printer, even though people tried to use it as the money printer excuse, but they were completely wrong. All right, so now here we got lumber at 437 per thousand, which is going to leave about a $2.65 2 by 4.8 in the futures price, which is about as cheap as it's been for the last 2 decades. So there's no inflation in lumber. It just completely left lumber. Gone. Doesn't exist. Until, of course, when the home builders start to ramp back up again, and then there's a shortage of material in the system, and then all of a sudden you find lumber prices shooting back up to their highs. Well, I don't think we're going to shoot back up to the all-time highs, but shoot back up again to some pretty high prices. Guitars are falling down. I have been waiting. Not your problem. Yeah, I know you've been talking about that for a while now. Yeah. Fed rate cuts with stock market all-time high. Okay. I don't think they're going to cut. I don't think they're going to cut rates. Like, I don't see it. I don't think it. And I don't believe that they're going to cut rates. Like, not anytime soon. In fact, there's going to come a situation in which you're going to find, like, all of a sudden the economy is going to be, like, rolling into inflationary pressures again from some of the things that I was talking about. Mainly, you just look at, like, how trucking is slowing down and the stock and, like, the shipping capacity for like, the freighters out in the ocean is now diminishing. Like the capacity is almost not even there. And then the available truckers is diminished as well. Like I can only imagine, like, what is it going to cost to get that stuff to the retail shelves, right? And during this time, there's low demand because there's elevated interest rates. So tell me, like, how long could that inflationary pressure last? Probably for some time, as there's no way to really relieve the pressure, right? If manufacturing slows down, which it is, then once this stuff makes it through the system, then there won't be anything left. And then the real shortages will kick in. It's only a matter of time, right? Before, you know, you're going to see, like, things of, like, necessities are going to, at some point in the future, get stupidly expensive. And the things of luxuries, which you're already starting to see, is going to diminish and fall like crazy. And you're going to see this happen over and over again, like, until there's an equilibrium that is found. You think about, like, how expensive food got. Like, just take just a couple of, like, really basic items, chicken and pork, right? During the COVID inflationary pressures that were taking place and the demand for chicken and pork had jumped way high, the price of it has shot right through the roof. And again, you know, the meat packing houses and slaughterhouses are all burning down and all that. All these people were talking about all this stuff, right? But there was a shortage of that stuff within the market and the prices went way up. Well, what happened to investment into pork and chicken? It went up, right? They wanted to take advantage of these high chicken and pork prices, so they started producing a lot of chicken and pork. Then what happened, right? All of a sudden, you saw the chicken and pork prices collapse. Then what happened? They shut down the production. Then what happens? Give us some time, and you're going to start seeing that the lack of production starts doing what? Starts raising the prices up. So the things that you want in your life that you need, not the things that you want, but the things in your life that you need, like chicken and pork, is going to start rising in price because they had just shut down all these manufacturing, all these production facilities due to the collapsing prices. This is the bullwhip effect. This is how it works, right? So now, with the less chicken and pork production in the system, what ends up happening, right? Prices for chicken and pork start to go up. So give it time, and we're going to start seeing that happen. If it goes up high enough, eventually you'll start seeing the investment back into production again. Right? Oversupply, undersupply, oversupply. Paul Land, thank you so much for joining the channel. So many people have now joined the channel. It is amazing. The members only channel, or members only portion of this channel, has just been like way better than I had ever even dreamed of. Like, it turned out, like, I started it and I wasn't quite sure of how I was going to do these membership only videos. We started doing, like, they're not necessarily courses, but we're breaking down the Fed speeches, like literally going through the entire speech and then having a conversation about it afterwards so we can really internalize that information. It's become so popular. Like, I am just absolutely amazed on how many people are now joining the channel so they can go and watch those back videos that we have done breaking down those Fed speeches, and so they can be part of the future videos that we do breaking down the Fed speeches or any other data that I happen to come across. And the community is just, it's overwhelming. It's just like, it's surprisingly and overwhelmingly like working fantastically. Like, I don't even know how to describe it because I didn't even think it would be anything. And yet here it is. It's just like on the move and it's running forward, you know? And I'm like, yeah, for $1 a month, right? For $1 a month, you get access to all these videos. You have access to the membership live streams that we break down the future speeches that are going to be taking place. You know, you have an insane amount of intelligence within the comment section that you get to ask questions. It's just like, I cannot find a better way of trying to break down current economic situations and understanding where we stand from the Federal Reserve's monetary policy. I cannot think of a better way to get there than what I'm doing with that membership only live streams. Like, I just can't think of anything else better than that. And like I said, for $1 a month, $12 a year, $120 for a decade worth of hardcore information that I have broken down and tried to have a discussion with the viewers so that everybody can understand what it is that is being said. I mean, we're talking about Basel III endgame stuff. How it is that the Federal Reserve can't really necessarily play the game of the rest of the world out there and regulating the banks to be under the same kind of set of reserve requirements, right? And so the Federal Reserve has talked about this. It's just like, listen, we don't have a system within this nation that can do that. We have some banks that are providing products that other banks don't provide, right? It was just like, and because of this, if you have a farmer or a bank that's in the Midwest dealing with farmers and you got a bank over on the West Coast dealing with tech companies, they're not doing the same thing. They can't possibly have the same regulations to them. And this is the stuff that we're learning about within these speeches, right? We're learning about average inflation rate over time with no mathematical formula to figure it out. And we learned about that stuff from years ago, right? I mean, this is the stuff that we have internalized and now are moving forward with a better understanding of what it is that we need to do for ourselves, how to position ourselves, what's coming, you know, into the future. And again, I just can't think of a better way to spread that kind of information. Trucking is getting killed. Worst peak season in a while. Load boards are dead. Lots of small companies are defaulting on SBA loans, leaving the market. Yep. And this is the, again, like, I just kind of take back again. If you couldn't hear anything, right? If you couldn't hear anything and all you had was your sights and you were way up on the hill and you're looking down up on the economy, right? And you see all these ships, they're stuck way out there in the ocean. And you're looking at all these truck drivers and they're all parking their trucks and they're shutting them down and they're not moving them around. And you're thinking, okay, well, all this stuff is out here and it needs to move, right? Now, whether it's going to that nation, this nation, or whatever, many nations are facing somewhat similar situations as the United States is. Like, you remember all the issues that Canada was having with their truckers and stuff? They had a whole different situation than we had, but they had, if you just step back and didn't hear the noise, you just look up there and said, okay, what's going on? The trucking is slowing down. What's going on in the United States? Trucking is slowing down. What's going on? You'd see the same things was happening back then. Well, you just step back up onto the hill again and look, right? There's a huge amount of stuff sitting out there in the ocean, and trucking is slowing down. How the hell are you going to move this stuff through the nation? You can't. Like, you need a truck. You need the trucks to do it. And if that business is being depleted, then guess what? The price is going to move up. Like, it right now, I would get into trucking. Like, I think that would be a good thing to do, is to, if you can hold on tight, cut your expenses as much as you can and hold on tight, because at some point here in the future, there's going to be a demand, because look at everybody's quitting their job. Everybody's getting out of the game. That's going to leave a limited amount of people out there who can do that. Right now, they're not in desperate need. At some point, they're going to be in desperate need. What happens when they're in desperation? Prices go way up. And then again, just think about it from the bullwhip effect. I mean, that stuff is sitting out there. It needs to go somewhere. How does it move? All right. All anyone needs is stale bread and pigeon meat. Ew. They're going to lower it a little and then act like gods. Your best bet is to get out. Where to? Places they hate. Now, why? Why would they lower it a little? If they lower it a little, they're going to give up their ammo. All right? See, they're trying to raise the neutral interest rate. If they raise the neutral interest rate, they can stand still. That's kind of like lowering it a little. If they could raise the neutral interest rate and make that neutral interest rate rise ever closer to the Fed funds that is stalled out and staying still, then that makes it less restrictive on the economy. It's kind of like lowering them. Right? And the only way you can raise the neutral interest rate is to have inflation expectations to run persistently into the future or alongside elevated interest rates. Hey, right on, Liu Ton Guan Gip. Okay, man, I'm sorry if I butchered your name. I really appreciate you joining the channel. I hope you really enjoy those member-only live streams that we have. There's a bunch of them that you have access to now, and we're going to be doing some soon. Sorry, I haven't scheduled one as of yet, but I haven't found the next speech that I really want to cover. So hopefully I'll do that real soon here. Time to grow some food away from the hard nudge formalities, yeah. Okay. Oh, wow. Look, there's another one. Space Cowboy. Member for 9 months. See that? See, Space Cowboy, he's been at it for 9 months now. And, that's the thing about it, is just like it's cool, because like at $1 a month, it's like, it's not that much, right? So rolling this over every single month is not a big deal for most people. Even one guy says, hey man, I just wanted to support the Uneducated Economist, and this is going to keep this one credit card active, right? So literally he's using it for that excuse. And I thought, man, that is awesome, right? If that's the only reason why you're doing it, I still thank you very much for that. And I thought that was cool. But then other members are like gifting memberships to other viewers out there. So as the people are just watching, they're being gifted memberships. They're like, whoa, all of a sudden they're like, man, thanks for this membership to the channel. Well, that got me thinking. It was just like, wow, what if like the appreciation for being gifted a membership to the channel was starting to be moved into a pay it forward kind of attitude. And then the rest of the viewers or the members of the channel who were gifted memberships start gifting memberships out there. Like, maybe 1 or 2 of them out there, and just keep expanding this thing to get this information out there. Because again, like, this isn't me trying to sell my theory. This is the Federal Reserve's monetary policy strategies and communications to the other central bankers out there. And when you see it, when you start to learn this communication that they have with these other central bankers, you can see that they're communicating 2 different things. One to the mainstream media through the propagandized information and whatever, and then the data and these working papers that they have and these speeches that they give. This is the communication that they are doing with the other central bankers out there. And when you look at it, there is 2 different communications that are definitely happening. They sound familiar in a lot of ways, But then when you look at like what this one is trying to push out there as far as like the meaning and the belief behind it is different from the actual communications to the other central bankers. And you can clearly see it once you understand the 2% target and how everybody is looking at this 2% target. Everybody, like literally 99.9% of the people look at a 2% target that the Federal Reserve is attempting to achieve, not realizing that that appropriate monetary policy is seeking to achieve inflation that is moderately above 2% for some time. Moderately above 2%. Not a target. Like if you had a rifle and you had the crosshairs and you had it on 2%, somebody says moderately above 2%, what would you be aiming at? What would your target be? Right? It would be above the 2%. That's the target, right? Is moderately above 2%. So since nobody knows that, and they don't understand why it's like that, we have figured that out. Like I feel like we literally, outside of the central bankers themselves, are the only ones who know this. I've heard other people try to talk about average inflation, and they screw it up. They don't know it. They don't know it right. Right? They got it screwed up. They just like they talk about it like they're talking right out their ass. Right? And it's just like I find it so comical. You know, even like these big time economists or people who are on YouTube who seem to know a lot about what they're doing. I listen to them talk about average inflation. They screw it up. They don't know it. And I'm not trying to be cocky or arrogant or anything else like that. It's frustrating. It's frustrating for one of these guys to come out and actually acknowledge the average inflation rate and then screw it up so that the rest of the people who are listening to him, who think that they are experts, don't now have misinformation running through their nugget. It's just like it just bums me out, really, you know. But it actually, I should be thankful, right? We should be thankful for it because really, when we think about that, we have information that then gives us access to. Here, think about it like that. We're in the camp, right? We don't have. We just have to make sure that we run faster than the slowest people out there. And when the bear comes into the camp, we're going to see it a hell of a long time ahead before anybody else does. Because they're going to believe that there's this 2% target and we're going to know that it's an average inflation rate over time. And they're going to do things that are completely different than what it is that the actual monetary policy is attempting to achieve. Right? And the only way that I would have ever been able to figure that out is through those Fed speeches, literally pouring through hundreds of them, because they don't spell it out. Like the August 27th speech given by Jerome Powell is very good, right? That one is very telling of the average inflation rate over time. The monetary policy strategies for a low neutral interest rate world, November 20th, I think it was November 20th, 2018 by John Williams, Monetary Policy Strategies for a Low Neutral Interest Rate World. That speech is probably one of the most important speeches out of all the Federal Reserve speeches that could ever possibly have been given at the time, was that one, because it was very telling of what they were about ready to do when it was pre-COVID. All right? They talked about it. Just go read the speech. And so Ben Bernanke's speech from like how to prevent deflation from ever occurring, that was another November of 2002, right? He gave that speech. Very important speech, right? You start piecing these things together, and you have to do it over time. Like there is no single document or speech or anything that clearly spells it out, right? There's another one that was recently done that we covered in the live stream, talking about the communications and how it is that the Federal Reserve learned that the adjustment of interest rates was more effective if they communicated a little bit about those interest rates ahead of time. See, prior to the communications, they didn't say anything. Like they would hit the markets with the surprise. They would be like, "Hey, boom, we adjusted interest rates. Go do something about it," right? And then the shocking to the economy is what the Federal Reserve believed was the way that you best effectively adjusted rates, was to shock the market with it. Now, they realized that if they communicated a little bit about the interest rates, well, then they could get more power out of the interest rate adjustment. Well, then they realized, man, if we communicate well ahead of time and clearly, we can get a lot of power out of it. In fact, if we set up all these different tools of communication and communicate in different ways, then we could actually figure out a way to adjust the monetary policy without actually having to adjust interest rates at all. Just our talking about it does it. And if we have all these tools that we have developed over the last decade or so in order to communicate it into the mainstream media propagandized information that then has people convinced in a particular direction, then guess what? It's as if they had already cut the rates. That's their monetary policy. Not the adjustment of interest rates. That doesn't work. But nobody knows that. So the classical form of understanding the Federal Reserve is very important to understand so that you can see the credible threat that they use in order to guide the markets into the direction that they want them to go. All right. Like whether it's an increase or decreasing of interest rates, it's the communication of it that's more important. And again, nobody could really, like, that right there is very, very difficult. Very difficult to explain. It's very difficult to see it, right? Because, it's literally, it's gaslighting at its finest. Once you understand it, once you have clearly internalized this and you recognize it for what it is, and remember, this is what Ben Bernanke said that they were going to do way back 20 plus years ago, is that they would have to use their communications. Remember, he used the analogy of a gold machine. And if a guy invents a gold machine, he can produce as much gold at will with very little cost or energy. The moment that this information gets out there to the market, the price of gold would plummet immediately, even before the guy produces a single ounce of gold. Even before he has the machine to do it. Just the credible threat alone would be enough to adjust the markets. That right there, that was what Ben Bernanke said in that speech. That was going to be their monetary policy. This imaginary gold machine credible threat theory, right? And it works. It so works. It works. In fact, it works too good. It works so good that nobody even sees it. People are like, well, what happens when the Fed cries wolf one too many times? Guess what? The only person who would say that is you, because you know it. Everybody else doesn't know it. They don't know that the Fed is lying, right? It's not a lie. They're just people just, like, was the Fed lying at the end of last year when there was going to be 7 rate cuts? How about the dot plot where there was going to show all these, interest rate cuts coming into the future? Was that a lie? No, it wasn't a lie. The dot plot is not a guaranteed written in stone forward guidance telling you that, or clear signaling. See, like, the difference between forward guidance and credible threat is that a forward guidance would be like, on the next meeting, we are cutting. We don't know by how much, but we are going to cut, right? That is forward guidance. That is signaling, right, that they are going to do it. Credible threat is that dot plot saying, like, oh, hey, look, some of us were asked what we think that interest rates are going to be or what we should do in the future, and this is what a bunch of us said, right? Oh, incredibly threat, right? But that's not what the reality of the situation is. And people ask me all the time back then. It was just like, what do you think about all these rate cuts that are coming? I'm like, I don't think they're going to come. I think that the dot plot is, just some interpretation of what the Federal Reserve feels interest rates should be based on the things that they are seeing today. But things always change, always, never stay the same. Right? So to think that there was going to be interest rate cuts that, coming into the future, if things stayed the same from 6 months earlier, is that even, like, who the hell thinks that? Nobody thinks that in 6 months things are going to be the same. I mean, some people wish they would be, but nobody thinks that they're actually going to be, All right. Moving on. What time is it? All right. It's not, but it's the only thing we can use to see what direction the Fed is heading in. All right. They start with rubbing their hands together. Fed never said they would be 7 cuts. No, I know they didn't. That's why I said, that whole dot plot and all the other stuff, people said that, they were using that as like a forward guidance thing. And people were like, what about all these, they promised, they, like Powell signaled, and I hear all this stuff, like, and I'm like, when? Like, this is completely imaginary. This media is pushing this information out there. It doesn't make any sense. There's no reality to any of these statements, as far as like, yeah, they're going to be cutting rates. Like, I don't see it. I read all this stuff and I didn't see it. Like, there's this interpretation of like, well, market conditions are getting better, and now we see that there, would be appropriate to adjust monetary policies in the future if things blah, 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 right? But none of that stuff is real. It's just them just mouthing it off, right? I mean, if they told you, yeah, things are looking better, is that all you needed to hear in order for you to believe that there was going to be an interest rate cut, right? Is for Jerome Powell to say, yeah, I mean, things are looking better out there, because that's ultimately what he is either saying. Either he's saying it's getting worse or it's getting better. No matter how he fills it in with all the little fancy words and everything that goes with it, that's it. Those are the only two communications. Either it's getting worse or it's getting better, all right? And if it's getting better, people just assume that that means that there's going to be interest rate cuts coming. But that's not the case. All right, let's go check this out. I got another Nicholas Thon. Thank you so much for the $1.99 super sticker. Very cool of you. Supporting the Uneducated Economist. All right, he definitely said we think cutting rates sometime in 2024 would be appropriate. Okay. And so, what does that mean? Right? Does it mean he's going to cut it? I mean, he said it's appropriate. What is that? I mean, if I took like every vague statement like that Jerome Powell had ever done, I think all the way back to like, making sure the work is done before we like raise rates, right? They wanted to make sure that, what was all the excuses? I can't even think of them right now, but all the excuses on why they kept interest rates extra low, extra long for an extended period of time. Like, I can't remember all the things that he was saying at the time. All right. But if we look back and we think about it, it was just like, I said it then. It was just like, you're going to see those interest rates stay low, extra long for an extended period of time to create an inflationary scenario to make up for the fact that they were not able to achieve the 2% target over time. So no matter what he was saying at the time, that was my response every single time. And that's still what I believe today, is that they had let interest rates run extra low, extra long for an extended period of time to create the inflationary scenario that they were desperately looking for. Not only did they get it, but they're getting the neutral interest rate to rise. They're getting their ammo back. They got the Fed funds rate up, right? Everything that they were wanting to do based on the monetary policy understanding that I have taken from the Fed speeches themselves, use that particular situation to keep the interest rates low, to create an inflationary scenario. And I can't remember what the excuses that they were using at the time, but it was something on making sure that they kept support to the economy before withdrawing too soon and pulling out the support and causing undue harm to taking away the support to the households and businesses. I can't remember all the reasons, but it was all horseshit, every bit of it. Like, whatever it was that he was saying inside of that to the public out there was not the reality of the situation. They were trying to create an inflationary scenario, and it totally worked. And it wasn't that they were trying to create an inflationary scenario with it. They were trying to create an inflationary expectation. That's what it was, right? They weren't trying to create inflation from the lowering of interest rates or keeping them low. They already knew that wasn't going to work. But if they kept it low for extra long for an extended period of time, and they pushed that information out there far enough, then the people would believe it in a fashion that would create the inflationary scenario. All right? I mean, inflation is a self-fulfilling prophecy. And it's like, you can have inflation not even expand the money supply. You can just have money velocity picking up, right? So inflation is all about consumption. It's supply-demand imbalances. And however that consumption can ramp up, sure, money printing can do it, but it doesn't necessarily mean that it's going to happen, especially the way that they do it with quantitative easing, where most of the time that just ends up on the big banks' balance sheets anyway. And unless that gets lent into the system, it doesn't really ever chase any goods and services, right? All right, moving on. The big guy is doing fine. All right, the Japanese did the same, thus you got the lost decade. Yeah. Well, see, Japan is a little different in the sense, like, I can't, like, even compare the United States to anything in history or anything currently in existence, right? No matter what economy it is that you are pointing at. Now, there is similarities in a lot of ways, but the unprecedented position of the United States being in standing of the world reserve currency and the level that they have done it, there is no other nation that even comes remotely close to even compare it to. Like it stands on its own in history, right? So when people say, "Oh, like it's going to happen," like somebody said something about like reading an economist book talking about the Weimar Republic or something like that, and they're like, "I think this very same thing is going to happen," and I'm like, "No, not to a world reserve currency." Nah, what's going to end up happening is that the dollar is going to strengthen to a level that is absolutely going to devastate people. It's going to destroy nations. It's going to destroy people out there. The dollar is going to grow stronger than anybody could ever possibly imagine it doing it. And when it does, it's going to be so painful of an experience that people just don't even understand. Right? They won't even understand what the hell's happening, right? Because they thought for sure the dollar was going to just lose purchasing power and just fade away. Right? But that's not what's going to happen. Like the dollar is not going to be destroyed in that fashion. The way it gets destroyed is through people stop taking out debts in dollars. See, as long as people continue to take out debts in dollars, there's going to be demand for dollars. So Saudi Arabia, they're going to demand dollars for the future. Brazil, they're going to be demanding dollars into the future. China, they definitely will be demanding dollars going into the future. Right? All these people, because they keep taking out debts that are due in dollars. They like, hey, I want to borrow dollars. Right? That's what they do. Now they owe dollars back out there. And so and as much information as you find out there about how people are like saying, no, they're just gonna abandon it all, it's not the case, right? I know China's not going to abandon the dollar because they have issued out so much dollar-denominated debt to other countries out there. They're like, they lent those nations dollars. Those nations owe them dollars. They are not going to abandon dollars. If they abandon dollars, those nations would be like, cool. We're off the hook then, right? Because we owe you in dollars and you don't want them, so, of course not. Right? China's going to be like, no, you owe us dollars, sucker. And I don't care how strong they are. If you can't pay them, we owe your infrastructures. That means all the profit, all the business, all the stuff that has a Chinese name behind it now. Right? And they did this across the globe. China ain't stupid. They played this game so many times. They know fiat currency. They know economies. They've been doing this for thousands of years. You don't think that they have this history written down? You don't think that they know this better than Cantillon? Like the increase and decrease of money to the state? China knows this stuff way, way good. All right? And they played this game so well. They played it. All right? They went around the world and they issued out debts in dollars to foreign nations to build up their infrastructure projects. That Belt and Road Initiative, that totally protects China from a strong dollar. As it destroys China, the strong dollar, they're not able to come up and pay their debts or whatever. These other nations get hurt worse and to the benefit of China. Right? And again, this doesn't have anything to do with the United States. The United States is sitting over there going, what the hell is going on over there with our dollars? Whoa. Huh. Right? Like this doesn't have anything to do with the United States. Go and look at dollar funding stresses, like the video that we did earlier today. Right? And the video we did yesterday. Saudi Arabia issuing out dollar-denominated debts and the dollar funding stresses of China. Both of them are like obvious to me that the dollar is not going anywhere, right? This is establishing the king dollar as the ruler, as the king destroyer of the world. Right? And China knows that, and they're going to take advantage of that situation. If the king dollar is going to destroy the world, it's going to do it to the benefit of China. You know? And then, like, nobody knows that. Nobody looks at it in this fashion. Everybody looks at it and says, well, have you seen China dumping treasuries? I mean, really, dude? I mean, think about that, man. And I'm thinking, yeah, they're dumping treasuries to get cash so they can pay their debts. How else do they get cash? Ain't nobody buying their stuff, right? I mean, all their stuff, the manufacturers are going to Mexico, going to Vietnam, going to Malaysia. I agree, Yui. Thank you. Yeah. But it's going to be a digital dollar. There's going to be digital dollars, but it's probably going to end up being stable coins or something of that nature. Something that is a digital component with a dollar backing to it, right? And that way the Federal Reserve can conduct themselves with their monetary policy like they normally do, and that monetary policy will transfer right into whatever it is that's being backed by the dollar. So if stable coins are being backed by dollar, monetary policy can go right into that. The Federal Reserve can say, hey man, all that legal authority and regulations and stuff like that, that's none of our business. That's the government's horse shit to deal with. We do monetary policy, so you guys go regulate that stuff over there. They got the digital coin component of it. The Fed didn't have to touch that stuff. They got the entrepreneurs out there building up the infrastructure, and all they have to do is deal with their monetary policy like they normally would and let the government deal with the regulations of everything. I mean, to me, it's just like it's becoming pretty obvious that at that point, if that was to take place, then the Federal Reserve could go and say buy the debt of a foreign nation, put it on the balance sheet, and then that stable coin could have the digital component to limit where it goes. Could it leave the country? Maybe it can only be used for certain items. This is the central banker's wet dream, right? Is to have the government regulating this sort of thing while they're back there going, man, this is just working so well. This has worked so well, right? And they don't really have to do anything, right? Canada is on its way to being 1/10 of the U.S. All right, all fiat currencies in history have failed. Yes, they do. And I agree. And I have very little doubt in my mind that the United States dollar will fail too. And in fact, it should have failed and pretty much did fail. The Federal Reserve's whole system came to an end just a few years ago. But nobody recognized it, and they knew that that was going to happen, so they set up another way of dealing with it, which is what we are now experiencing, right? So they completely changed the way that they conduct themselves on monetary policy. Nobody knows that, but they did, right? And as we go into the future, if we move into a digital component, now we got a whole new way of doing things. So how long can they keep this fiat currency system going? Well, if you have a digital component and negative interest rates, well, you might be able to go on forever, right? I mean, how far to the right of the decimal point can you go? How far into negative territory can you go? Canada is 41 million due to 3 million JEETs in the past 3 years. All right, the problem with our debt is that the action we need to take will be very painful, and no politician wants to deal with that. That's very true. I totally agree. The Roman fiat currency in the form of debased coins lasted for a couple of thousand years. Okay, so Cantillon actually goes and talks about the issues that they were facing from that, from the debasement of coins within there. Now, it was pretty interesting. Now, whether or not the debasement of those coins lasted thousands of years, or let me see if I can find it in here. Where was it? Shoot, I should find that and talk about it because he actually goes into how it was that the Romans had moved into iron coins, right? So basically, had these iron coins that were being used for commerce. Well, people found that the iron content of it was actually worth more than the face value of the metal. So they started making stuff out of the coins, right? And they're like, "Oh shit, we can't have you guys making shit out of the coins. You need to use the coins for commerce, right? You need to do transaction with those coins." And we're not, there's no coins. It's fiat currency, right? But you're using the coins to make stuff from it. So they tainted the steel or tainted the iron with like vinegar or something. I can't remember. That's why I wanted to read it. And it screwed up the iron, so you couldn't use it for anything else. It could only really be used for these coins. Well, that's what's funny about it is that then they absolutely destroyed their currency, right? Because now you can't even use it for anything. And so what ended up happening from there is that other nations out there who also had a fairly decent iron supply started making up coins that looked like the Roman coins there, and they just started spending it into their economy, which again completely destroyed their economy on top of it. So not only did they like screw it up and destroy their own currency, but then other nations just basically just printed up their own fiat currency of of the Roman coin and just bought a bunch of stuff from them and destroyed again, continued to destroy their destroy their economy. So It's pretty interesting to hear. I wanted to read it from Cantillon, part of it, because he does a much better job of talking about it. But yeah, like fiat currencies, like you think about it, like tally sticks is a fiat currency that lasted like hundreds and hundreds of years, right? Literally chunks of wood that was used for commerce. So, like, there is ways of having a fiat currency that can be forced into use and stayed present, but it's under force, right? It's under rule, legal tender law. Then you can make it kind of happen for a while, but even then you're going to end up with your issues from it, right? Like the tally sticks worked well so long as you have a as long as you can govern it well, right? As long as you don't have things that are getting out of the ability to govern it. So like in a king's rule, then well, the king's rule, you got to do it or else. But when you get into like, free will, then it doesn't work anymore, because it's just like you can't force people to do things that they obviously know aren't right, unless it's under penalty of death or something. So in a sense, like, yeah, fiat currencies can work, but it comes under rule, right? That you have to use it, and nobody does it by choice unless they just community together and say, yeah, we're going to do this. Yep. Anyway, all right, some more memberships. We got Farrell. Thank you so much for joining the channel. You're going to really enjoy all those membership-only live streams that we have done and breaking down those speeches. Thank you very much, man. I can't wait. Like, I'm excited. Like, I want to see 1,000 members to the channel, but really, I want to see 10,000 members. Like, if I could get the channel up to 10,000 members, man, that would be awesome. It's like that would be the ultimate sponsorship to the channel. Every day I have like my email, like when I open up my emails, like I might have one or two legitimate emails in there, and then I'll have a dozen people, companies, some of them might be fake, I don't know, all looking to sponsor the channel. Like how much does it cost to plug a 30-second ad into your channel? How much, and some of them offer like unrealistic amounts of money for it. Like, I mean, some of them I did when I was doing those damn gold, like the few sponsorships I did, they paid a stupid amount of money. But like every single day, these sponsors are trying to hit the channel up. Hey, I'll give you $500, give you $1,000 to put a 30-second plug into the video, and I don't take ever. I don't ever take these things, okay? And it's because I just don't like the video content. I don't like the way it makes me feel about it. I don't feel that that's what I wanted for the channel. And so when I think about the membership and I think about that sponsoring the channel, that excites me. Like that makes me feel good. It gives me something that I can push here on the channel that I know is going to be a benefit. It's going to be valuable. It's going to be useful to the people. It costs $1, so it doesn't really cost that much. All right. And it's you, the viewers, who are sponsoring the channel, and not some video game or some gold stock I'd never even heard of, All right. Simon for the Fed chairman. I don't think they would have me, man, because I wouldn't put up with it. I wouldn't be like, man, I can't do this secret, stupid, credible threat bullshit. Like, I mean, I'm gonna let everybody know. No ads is very solid, Yui. Well, thank you. I appreciate it. Now, believe me, man, I mean, like, it's hard to pass up, You think about it, like, if I was to take all the sponsorships that anybody had ever offered to me over the years that I've been doing this channel, like, if I took a bunch of them and just did it on every channel, of course, I probably destroyed my channel, but had I done it, I probably could have had all the money I want. Like, I could have been done by now. I mean, I'm millions of dollars and sitting in a bank collecting interest, living off that or whatever. Like, I could have been done, I could have had that by now, But it's not what I wanted for, it's not what I wanted for myself in this channel, but it's certainly not what I wanted for the viewers. Right? That's not what I like. What I wanted for the viewers is exactly what I'm doing here, this kind of thing. And if the viewers sponsor the channel by becoming a member and sending off the super chats and the super thanks, the stickers and all that other stuff, man, I mean, that to me is the appropriate way of going about it. In the t-shirts, I have t-shirts for sale too, but UE, solid information. Thank you. I appreciate you guys. Maybe if he was Jewish and space cowboy. All right. How is this live? It looks like 1 p.m. in the background. Oh, because I live up in the Pacific Northwest, and so it doesn't really get dark here, and this time of year until about 9:30, 10 o'clock. And then it'll get light again about 4:30. It'll start getting light. So yeah, we have very, very short nights and very long days up here. All right, why is it not live, dude? The sunset is 9:30 in the Pacific Northwest. Yeah. All right. Well, it's 11:40 here, and they are minus 5 hours, so it's like 6:40. No, it is 8:41 right now. Yeah, 8:41. Wow. I was supposed to call my friend. Oh shoot. Well, I guess I'll give her a call later. That's why being a good neighbor will better than hoarding stuff will recompense? What is that? All right. I thought he lived in Oregon. I do live in Oregon. I live in the Pacific Northwest corner of Oregon, in a little town called Astoria, home of the Goonies. All right, people are pretty stupid with the time thing, huh? No, not really. I mean, if you never really experienced it, then I guess that would be, it'd be different. Like, especially if you live down in the southern part of the United States, then yeah, then you time differences is very subtle and not nearly as like extreme as experience up here. You go up to like Alaska where Old Nighter is. I mean, it doesn't even get dark. It just stays daylight all the time. It gets dark for like a half an hour or whatever. uh, we are experiencing time inflation. My prediction: more inflation, pressures coming, bigger deficit spending, more wars. Well, yeah. No politician will ever make the debt part of their platform. No. Yeah. You're just over the bridge to Washington. I'm in downtown Portland. Time inflation. Alrighty, guys, this was a lot of fun. Thank you so much for hanging out. We got 2 hours into this live stream. I think we probably covered it pretty well. Hope you guys are keeping an eye on that lumber market. It is so telling of what's going on within the economy, and I can tell you, man, it's going to be real exciting when the switch finally happens and the demand starts to pick up. Whew, man, I just feel that there's not going to be a lot of lumber in the system, and the prices are just going to just skyrocket. So couldn't tell you when that's happening or by how much, but I tell you, it's building up. The pressures are building right now, and it's becoming really obvious, especially having those vendors call me up and asking if we were looking for lumber that they could sell at below the print price or what would be like considered a spot price. Very, very, very rarely do you see stuff like that happening. So, alrighty, guys, this has been a lot of fun. We got Peace from I Need to Fish. I'm glad to see you here. All right. Einstein predicted time inflation. He just didn't know it. God bless you, pal. Portland, home of the commies. Yeah. Solid market info, UE. Thank you, guys. All right, when is the next streaming? I'm going to try and put together a members-only live stream. Like, as far as my streams, like the videos, like, guys, I feel like I've been doing these like twice a day for hours a day, every day for like weeks now. But the member-only live stream, I'm going to try and bring those up as they come up. Like, there's going to be a blackout period coming to the Federal Reserve here soon, so there's not going to be any information coming out of them up until the actual meeting. So I'm going to find some stuff to try and cover, and I'm going to try and do at least one video a week. I've been a little bit busy this week. The family went camping, so I was going up there and hanging out with them and not really having access to the internet or doing anything like that. So I was a little busy this weekend, kind of last week. So I'm going to get back on schedule and hopefully have these things on a regular timeline so that people can kind of prepare in advance for that moment, for those live streams. So far they've seemed to be pretty good at doing them like on a Saturday morning or something like that. But at this point I don't have one scheduled. I will schedule them. I'll put them in advance, so like there's like at least a 24-hour notice, that the live stream will take place. But yeah, I really encourage everybody to join the members only live streams. They are super, super informative. And I just don't know where else you're going to get that kind of information. Like, I don't think anybody else is covering it like that. And, really just, you just have to check, just, I mean, 900 members to the channel now. I mean, it should talk for itself, how valuable that really is. So, all right. Thank you very much, everybody. Uneducated Economist, you let me know.